They're going to destroy the dollar. They're going to inflate the crap out of it. They're going to use the stablecoin legislation to front load debt issuance into the front end of the market. And then they will let gold go to the heavens. I believe this. Truly, I do. And they will peg it to the long end of the bond market to have zero borrowing costs to reshore manufacturing, to sell treasury debt bonds at a much longer duration at a zero borrowing costs redeemable in gold. I think they're going to do this. I truly do. And I guess we'll see.
You have to wonder, is this a conspiracy or is it already reality? Because while you're being sold paper, Andy Schectman just exposed how the US is quietly engineering a backdoor gold standard, and they're funding it with fake dollars. With stablecoin legislation passed, they've created a synthetic treasury demand loop using fiat-backed tokens while quietly allowing gold to run higher. Why? Because they're planning to peg gold to the long end of the bond market, revalue it to $10,000, and use it to rewrite $28 trillion in debt without selling a single ounce. This isn't speculation. This is the setup, already in motion.
You have to wonder, is it a conspiracy or is it reality when you talk about when Chris Powell says there are no free markets, just manipulations. The traders suck in the speculators, and then right at the end, they smash the price so that the options expire worthless. The big banks get to keep the premium on that, and then it goes right back up. They rinse, wash, and repeat. But this is a game that's much more difficult to do so. And it kind of reeks like we're getting to the end of this game. We've heard that before, but the level of the spread in the exchange for physical jumping up 250% last week, the no shares available to borrow of SLV, none when there's usually millions. The 7 or 8% lease rate, highest I've ever seen, the T plus 8 weeks, the deliveries. Things are changing, and it's as dumb as a mud wall to continue this game. I think they know that. Also want to talk about perception. You know, I wrote down homes are getting cheaper in gold. Now, homes aren't getting cheaper, but they are in gold. And, you know, people talk about this real estate deal where homes are so unaffordable. They're not unaffordable in gold if you've been holding gold, because measured in dollars, you're getting crushed. Measured in gold, you're winning. Since 2005, it's fallen off a chart. It's gone straight down. The amount of gold that you need to buy a home, it's at almost all-time lows or very darn close to it. So in other words, gold is keeping pace. The dollar is not. This is the point that needs to be understood, is that gold is not here to make you wealthy. It is wealth that keeps pace with inflation. And that's really the bottom line. Right. So if the average price of a house is like $400,000, you're talking, what, 130 ounces of gold buys a house for you right now. So, you know, what would it have been if you look? I don't have the graph on my computer here. I wish I did. It didn't transfer for some reason. I thought I had it on there, but it's a falling just like this, where in gold ounces, if you would have bought gold and put the money instead of in the bank, because you're going to buy a house in 5 years, and you put it in gold, it's gotten cheaper and cheaper and cheaper and cheaper every single year. Even with house affordability going stratospheric, no one can afford a house any longer, it seems, with the cost of money and the increase in the price of houses. This is my thesis right now. I believe they are going to intentionally destroy the dollar. They're going to destroy the dollar to support the system. I think what they're doing with the stablecoin legislation is they are trying to move the majority of debt issuance to the short end of the curve through stablecoin issue, because you are seeing the governments that used to support our debt are no longer doing so, right? You have now the Cayman Islands and the United Kingdom and Ireland. It's a joke. And they understand that the amount of debt, we have to come up with $28 trillion in debt in 3 years when we only take in $15 trillion in tax revenue. We're not there. They understand that. And we're seeing less and less and less buying of our treasuries. So instead, they passed the stablecoin law where all of these stablecoins will be backed by US dollars in order to have demand for a treasury market that is losing demand. So you put that all on the short end of the curve, right? Where I think they're going to do it, and kind of blur the significance of the long end, which I'll get to in a moment. But I think that's first and foremost what they're trying to do. Remember when Janet Yellen did that? That was good for gold. That was good for stocks. It was inflationary. And I think that's what they're going to try to do. At the same time, they reshore all the gold and they're going to let it go higher and higher and higher and higher. Not very easy for the public to discern. There'll be volatility, there'll be consolidation, but it will keep going higher until people feel it's gotten too high. And then they'll probably come in and revalue it to a level much higher. And they're going to peg it to the Treasury. Why would they do that? Why would they peg gold to the back end of the Treasury market? The short end, the front end, will be backed by these stablecoins, which they will pump out by the gazillions because now they have this synthetic demand, not a organic demand like we used to have when we were revered and we ran a surplus and we didn't instigate wars all over the world and fund wars all over the world, and we're not revered anymore. So the back end of the market, who the hell wants, and especially when Trump talks about creating all of this money to rebuild our infrastructure. So in essence, printing money to build our infrastructure to compete with the rest of the world. They don't want to buy our treasuries. So they will just do the stable coins to get all of this demand for the front end and load the debt there. But the back end, I believe they will peg to gold. As Judy Shelton has said, on July 4th, next year, the 250th anniversary, he has said it repeatedly. Again, she keeps saying it on Twitter. He will peg the 50-year treasury to gold. Why would you do that? And you have to get gold much higher. And I think she keeps talking about gold revaluation. They will revalue gold. And I think Luke Groman, one of the smartest dudes I've ever met, he's talking about revaluing gold. He thinks they'll let it go to $7,000, $8,000, $10,000 and then revalue it to a much higher level to give the Treasury General account $5-6 trillion in free, clear revenue without selling an ounce of gold. And we talked about how that happens. There's miscommunication on that too, because some people think that when the Treasury issues Treasury certificate or gold certificates, gives them to the Fed creates the money, takes the gold, and gives the Treasury money free and clear. Every $4,000 increase is $1 trillion free and clear to the TGA account. The Fed doesn't have control of that gold. They have control of the fiat. They're owed the money value of that gold, not the gold itself. Anyways, if they do that and peg it to the long end of the bond market, she said 50 years first, shorter durations, maybe 30 and 20, later, maybe 10. But why would you do that? Because now you can have zero borrowing costs. You can put a zero coupon on that. The gold redemption at the end is the borrowing, is the interest rate, is the inflation gauge. The more foolish we are in monetary policy, the higher the price of gold goes. To be able to get that at redemption would allow for long end low borrowing costs, almost down to nothing, which would then enable us to slowly reshore our manufacturing at very low borrowing costs, and then to grow our way out of this problem eventually. The only way you get rid of inflation and where we are right now is to produce our way out of it. And we're a long ways away from that, because in order to facilitate the amount of debt that we owe, pay it off, just the $28 trillion in maturing Treasury debt by 2028 with $15 trillion in revenue, we're halfway there. And that doesn't take into account the $3 trillion a year in deficit spending. So you're 25% of the way there. So you have to inflate. They're going to destroy the dollar. They're going to inflate the crap out of it. They're going to use the stablecoin legislation to front load debt issuance into the front end of the market. And then they will let gold go to the heavens. I believe this. Truly, I do. And they will peg it to the long end of the bond market to have zero borrowing costs, to reshore manufacturing, to sell Treasury debt, bonds at a much longer duration at a zero borrowing costs redeemable in gold. I think they're going to do this. I truly do. And I guess we'll see. But I think to save in dollars now is the dumbest thing you can possibly do. You're destined to go broke. They're going to destroy the value of the dollar. They are going to inflate the crap out of it. There is no other way, period. So that is my thesis right now. And I'm very, very convinced that this is something that they are, if not implementing right now, it is, by all of the things that we hear and see. It'd be too long for me to go through the whole litany of them, but I also find it interesting talking about saving in dollars. You're destined to go broke. Well, part of what Trump wants is a weak dollar, right? If you revalue gold, by the way, what you do is you devalue the dollar. When Roosevelt increased the price of gold from 20 to 35, he did it by devaluing the dollar by 40%. He wants a weak dollar to make manufacturing more competitive. So part of bringing back the manufacturing and reshoring it, you have to have a weak dollar. Look what the dollar's done. It's fallen 11% this year. And so he wants a weak dollar, he wants low interest rates so that he can, and then ultimately, you know, you have the stable coins front loading the short end of the market to facilitate debt, but then you peg gold to the back end to have zero borrowing costs to bring back your manufacturing with a weak dollar. He likes a strong dollar, but you make a hell of a lot more money with a weaker one. He says, so when you have a strong dollar, one thing happens. It sounds good, but you don't have tourism, you can't sell tractors, you can't sell trucks, you can't sell anything. So he went on to say that manufacturers, would be the first to benefit from a falling dollar. Japan and China fought for weaker currencies for decades and were able to dominate markets over the years. Now it doesn't sound good, but you make a hell of a lot more money with a weaker dollar. These are the crumbs that I speak of that I've been following for 5 years. You find crumbs and either you take it for what it is and realize that these people who talk, part of their conscience comes out when they speak. They may not be fully honest, but they're telling you what they want. They want a weak dollar. He knows a weak dollar is a necessity, and that's where we're going. And the funny thing is that one of the things that I found very interesting, this last article I read, was how home affordability is so high, and that lower interest rates would help, and would help first-time house buyers, as an example, with cheaper money. But think about this. We're so far down the rabbit hole. This is why things have to change. If we lower rates just to allow the anomaly to continue for you know, and for prices to continue to rise, if they do lower rates, and all the talking heads will say what a great job they did by lowering rates, it's just going to spike inflation again. So the moral of the story is that the dollar is going to weaken further. You're going to see a weak dollar. You're going to see a situation where the Fed has no choice, the government does, but to print our way out of this problem, and then eventually reshore manufacturing to grow your way out over the thesis that we talked about. But it has never, ever, ever been more important because of decades of low interest rates and money printed and inflated printing and inflated asset prices. You can sense this acceleration. I mean, things are starting to really move. And again, and I think now more than ever, people need to understand why we own gold. It is not to become wealthy, it is wealth. And it's going to back the new system. That I do believe. But being in dollars right now is really, for your financial health, the worst thing you can do. And we can see that on a myriad of metrics.